All right, good evening, everybody. It's Monday, June 24th, 2024. I'm going to try to make this quick. We're here at precisealgorithmtrading.com, and I'm going to burn through this quickly because I got a lot to cover, but there's been a lot going on. I've been doing a lot of work, and I've also been tied up with a lot of other things personally. So, our automated trading systems. Here's the YM, and it I think pulled back a little bit today. Let's see. Today's the 21st, 4th, and it hasn't traded since the 21st, so it did not. The Russell, which is still not really ready, I didn't work on it that much over the weekend because I got into thinking I've got the other one active, the NASDAQ, and I wanted to make it smoother and better, so I worked on that instead. And, anyways, this one, the way it stands, um, on the 24th, had a actually a really good day. But if you notice here, there's like 4 o'clock in the morning stuff going on. So that wouldn't happen if I have just the trading hours marked for during the when the market's open, when the stock market's open, I should say. So that would have been negated, which is fine. I'm not going to trade these things 24 hours a day. Uh, and then here's the updated, better, at least I think better, um, NASDAQ. Now, this pullback right here lasted a month, and those are going to happen, but at the same time, the drawdown was, I think, less than, I think it's 10,000 bucks or thereabouts. So, this is everything I had before. It's all the same principles. It's just the algorithm is a little tighter. So it's yeah, that's it. But in any case, it's actually pretty good. It almost mirrors the other one, but it's actually a little tighter. Like my stops are a little tighter, which is I think great. They're not too tight, so you can still get a pop like we did there today. By the way, these are today's trades, and it trades quite a few times. It has a lot of stop outs, but when it doesn't, it has nice gains, and that's the point. All right, moving quickly through this, let's get to the manual trading systems, and let's look at. So I've been talking about this chart on the right, which is the daily chart, um, and kind of focusing on the daily chart. I've talked in the past about my um, Harvard lines. Well, the Harvard lines are a monthly system, which you could get bored to tears if you wanted to watching a monthly system. But the Harvard lines combined with the daily chart system that we have is, I think it's really, well, one, it's really popping, and two, I don't think it could be, um, you can't get much better. So uh, my Harvard line study, if you actually get a buy signal that goes up above this yellow or gold Harvard line, and after you've got a downtrend or even just one close below the the blue Harvard line for the month, and you buy back in and you get in here, you're only going to risk the difference between this closing price and if it closes back below the blue line in a month. So, like in this case, let's go backwards here. In this case, you'd get in at the very next the open of the next month, and you'd only be risking from there to there, which is a little over 3 or 4% to make whatever that is. Let's call that 10 times on your money, um, 10 times the risk, because I'd say that's yeah. I can actually have the thing do the math, but let's act like this was the time you got in. What's that going to be? 4 times? Now, granted, if you don't take some profits when you're up, you could get a close back below, and that wouldn't be much of a gain because you look at the close of that bar and the open of that bar, and it's just that would have been almost a wash. But you have to get out, or else you could suffer some losses. Well, let's go back in time though this is just the S&P 500, but here you get in on the open of the next bar. Yeah, you have to sustain some volatility, and then it goes up, and what's that? You're risking about 3 or 4% to gain. That's another 30 or 40%. 10 times, I'm guessing, on your money without doing. It's probably more than that. Here we go again. There's another one. Okay, that's the S&P 500. Is it special? Well, let's look at the Dow in a similar vein. So this is how the Harvard lines work. And all I'm doing is trying to give you a little backstory for how we can look at the daily chart and kind of knowing what's happening in the monthly chart, which is a longer time frame by far, but knowing what's going on in the monthly chart and applying it, so we're only trying to go long when it makes sense to go long. So anyways, the point being is, here's a buy signal, here's not a sell signal, and you get this thing goes again. You're risking that. This in this case it might be 7% that you're risking, and you're going to go from here to here, which is at least 4 times on your money. Now you get some chop here. Sure, you're going to have that. No system is perfect. There's a nice one. So this is the Dow. There's a good one. So anyways, and by the way, you can also trade it short, but you got to be a little bit more nimble. Well, is the Dow and the S&P, are they special? Well, look, here's the Russell, where you get in here, you're risking this much, and you get up there to the top, and you're probably gaining 4 or 5 times on your money. And looky here, we're in a position here where this is going to the upside. So that's part of the reason why I'm in IWM, by the way. All right, if you don't see that or understand it, you can drop me a line. I can certainly talk about it more. But let's look at like Carvana as a special case. So Carvana was a high-flying stock for a while back in these days, and it pulled way far back, and then it started to climb again. And you can see that when it climbs well, and when it pulls back, it's relatively tight while this is all going on. So, all right, I'm going to open this up. So we're just looking at this chart, and then we're going to do a quick analysis of the overall markets. So the S&P 500 today went down 16 points. We're we're in that upper reversal zone in a lot of ways. The Dow went actually up 260 points. At one point it was up over 300 points. And it closed in the neighborhood of, well, let's look, 39,410. Yeah, 39,411 actually. So are we trying to get back up to that 40,000? Potentially this. I'm seeing a triangle, or a sideways triangle pattern that's kind of forming, and we could break out of this area with some gusto, really. So that's interesting to me. And we talked about the Russell. So the Russell is it appears to be going higher, IWM. So today it went up 0.43%, and IWM, by the way, is not green, but that's all right. It doesn't have to be green yet. And the Nasdaq actually is probably the one that's given up the most lately. So the Nasdaq actually today went down 1.09%, or 192 points, and we've been seeing this kind of sell-off in tech. And so while we're looking at that, let's look at NVIDIA, which I was calling this a while back when when Nvidia was splitting, it lasted another, it had another whatever week or so of rally after that. Now it's coming back to the ground, and I think you know, somewhere getting to like $100 maybe is this existing level where it took off from, and I think that's where the really the fight might start again for this thing to go higher. All right. Well, let's for fun look and see what that looks like on this chart. So this is the monthly chart of Nvidia, and yeah, that's a nice big topping candle, and the month is only 3/4 over. But boy, I think there might be a chance we get all the way back down to 86 or $90 in some time here. So, but I'm not really calling that either. All right, what else do we have? Oil. Oil's been breaking out higher, and I'm looking for a good entry. Went up 1.34%. And gold, GLD, which is faltering, and I'm considering actually just getting out, but I'm going to give it another day or two and see what happens. So those are the broader markets. Let's look also at TLT while we're here. Bonds. Again, I'm trying to look for a good entry here. I don't think I'm in this yet. And yeah, that's enough for today. IYT, I guess. What are the transports doing? The transports rising here is an interesting thing. So I'm watching really for a break of these gold bars, and that could be really. I mean, I actually think that would be really good for the markets because the transports, basically the rest of the markets can't really get going without the transports taking part as well, or really the small caps in the Russell. So, all right, let's flip to this. I went ahead and threw, instead of when we look at all the charts combined on the right hand side, which we've been doing, I went ahead and threw its monthly chart up there just to get a look at how that's been climbing. That's literally, if you combine all the futures symbols that we typically look at as far as the broader markets go, the Nasdaq, the Russell, the S&P, and the Dow. Add all those together, not including commodities. You can do that. I just don't know that it helps. So you can see that you add all those together, and you get a pretty good read that sort of goes hand in hand with the bullish percent indexes, but yeah, you'd have to study that to really see if they totally correlate or not. They almost have to, from the way I study. But anyways, that's that. What else we got? This the VIX. So the VIX is sort of in the higher range here, which is sort of dangerous. But if we pull down back into the lower range, I think the markets can sustain. And what I really think's happening here is that we've got the technology giving it up finally to the downside a little bit, just really selling off, and then other sectors are getting picked up, and that's what I think's happening. And if this thing gets really out of whack, we could see, all of a sudden we could see a major shift, and we do have a presidential election coming up, so there's total potential for a shift in like 4 months. So it'll be interesting to see what happens. All right, that's that, and I'm not going to get political because I honestly think certain stocks can go well or poorly for either way that turns out. And finally, the bullish percent indexes. industrials are up and added a new green X today, so they're up 11.76%. That sure looks like what we're seeing. So the NYA is up 1.09%, even though it's in a dangerous spot with a column of those. The transportation index added 2 X's today, and it's up 10%. That's interesting. The NASDAQ minus 0.92% and a column of X's. The S&P 500 up 3.15%. This is kind of backing up and supporting what I'm talking about. The S&P 100 is tacked on 2 new X's and up 6% today. And the NASDAQ 100 also actually tacked on an X today, but it went down 3.39%. So I think that's what we're seeing. I think we're seeing some underlying weakness that's going on in the NASDAQ and the techs, and some strength that's coming in the other sectors. So that's what I got. Hope it helps. Take care, guys. Good trading, and have a great night.